Hello and welcome to another update video about ADA. ADA is consolidating sideways, but we're holding above the communicated support area. So yesterday we talked about the support area already on the chart, the micro support area that's on the chart highlighted in orange. I'm going to take a look at that in a minute. But first of all, before we dive into the micro patterns, let's take a look at the 4-hour chart here. And you can see on the chart the pattern that developed or has been in development since June last year. So it's still basically counted best as a diagonal pattern, as a wave 1, a wave 2, a wave 3, a wave 4, and then this wave 5, obviously here, to the upside, 5 waves up. And the thing is, it could be complete already, this 5-wave pattern, but we haven't reached the ideal target range. I'd like to see 85 to 96 cents reached. Also, there's currently no evidence of a top in place, not even on the micro level. But even if the first support area breaks, that I'm going to talk about in a minute, there is a lower support area in which the price can still find support to then make another attempt to extend the pattern. So ideal structure 1, 2, 3, 4, and the wave 5 should still stretch a little higher, either more directly or in an ABC with one more pullback. And then once we have 5 waves complete, we could have a more substantial top in place. So that could mean that all of this was a so-called leading diagonal in wave 1, highlighted here with a question mark, and then we can add a support area for the wave 2. Oftentimes a wave 2 tends to end in the region of the previous wave 4 of lower degree. That's here around 46, 47 cents. Yeah. So that's sort of the area, support area here. Yeah. So 5 waves up, 3 waves down. That's sort of the idea. And typically, there's no guarantee a wave 2 ends in that region. It's more a guideline. We can then add, in addition to that, the relevant support levels to the chart. Let's take a look at the 1-hour time frame. Here you can see the detailed count, the detailed assessment. The idea is that from this 4th wave low that was formed on the 23rd of January, we've had a 5-wave pattern to the upside, which I would label wave A. Then we had a pullback in what I label wave B. And then this could now be a C-wave rally to complete the diagonal, because in diagonal patterns, well, they are 5-wave movements. And in the 5th wave, we should get an ABC structure like in the 3rd wave, in the 1st wave. So we are looking at this as an ABC structure. The C wave to the upside should be a 5-wave move. And it's possible that this 5-wave move unfolds as an ending diagonal. I know it's getting messy again. That allows us to define an upper support area, and the lower one is already communicated. As long as the upper support area is holding, this white roadmap can be followed in a very straightforward manner. So the idea is we have certain Fibonacci support levels here between 68.4 and 72.2 cents, with additional support at 71.1 and then 70 cents. These are levels that are relevant for a potential B wave pullback. Didn't want to shift that. So just double checking. Yep. So we have the measurement of wave A. These are the relevant supports for wave B, and the C wave rally can start from here. The B wave could unfold as a triangle or as a WXY. That's possible. Certainly no evidence that the B wave has bottomed already. And then the C wave could reach 84.8 to 91.5 cents, because that is the ideal target range here for the 3rd wave. Well, the 3rd wave should minimally reach 84.8 cents really. Yeah, better a little higher. And then we should still get a wave 4 and a wave 5, and that would send us into that 85 to 96 target range. A break below 68.4 cents would be a first warning or indication that the lower support region will be retested, and that in fact the B wave that presumably bottomed on the 5th of March never finished. Instead, we will just reset it a little bit lower, and the price could then test 55.7, maybe even 50 cents again. In a more extended B wave, which would unfold as an A, B, C structure. So I think the support levels are clear. I think this is the one that I would watch first. This is the one that's currently being tested. The market respects it. And we can keep it very, very simple and very straightforward. As long as the upper support area is holding, the market should move, or the price should move to 85 to 91 cents next. Break below 68.4 cents wouldn't necessarily be bearish. Short term, yes, but then we would retest probably this range, would then most likely move into the region of the previous B wave low, maybe even a little lower. That's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.